All right, let's talk about what just happened on Wall Street. We saw this incredible tug-of-war play out, a day where really good news from the Federal Reserve went head-to-head with some pretty scary geopolitical fears. The market was completely torn, and we're going to break down exactly what that means for you.
So, here's the game plan. First, we'll look at the absolute roller coaster of a day we had. Then, we'll dig into the forces playing tug-of-war with the market. After that, we'll zoom in on the biggest stock stories, the real winners and losers. We'll explore 3 potential paths forward from here, and then wrap it all up with the single most important takeaway you need to know.
So, what did this roller coaster actually feel like? Well, from the opening bell to the close, the market was just a battlefield of mixed signals. It was honestly hard to know which way was up.
The day was Tuesday, October 14th, 2025. And right from the get-go, the U.S. stock market was just sending these deeply conflicting messages. It really set the stage for a day of serious division.
And just look at these numbers. This tells the whole story, right? You've got the Dow Jones, which is full of your big industrial and financial companies, actually finishing in the green. But then you look at the tech-heavy NASDAQ, and it got slammed, down almost a full percent. That split right there, that's the central mystery of the day.
So how do we get here? I mean, the day was a total whirlwind. It started down because of renewed U.S.-China tensions. Then, boom, a rally midday thanks to some hopeful words from the Fed. But it didn't last. The gains just vanished in the afternoon when new trade threats popped up, leading us right back to that split finish, a true tug-of-war.
So if you had to boil this whole crazy day down to 2 things, what would they be? It's pretty simple, actually. The single biggest bright spot was the Fed basically hinting that easier money and lower interest rates are coming. But the dark cloud hanging over everything, the U.S.-China conflict, which decided to flare up all over again.
Okay, so let's dig a little deeper into these 2 opposing forces. What was really pulling the market in 2 completely different directions?
On the good news side, you've got this quote from Fed Chair Jerome Powell. Now, slowing the pace of asset runoff, that's just Fed speak for, we're going to stop sucking money out of the economy. It's the end of something called quantitative tightening, and the market heard that loud and clear as a signal that rate cuts could be next, and Wall Street loves the idea of rate cuts.
And it wasn't just the Fed. Adding to the optimism, it was the start of earnings season, and the big banks came out swinging. JP Morgan, Goldman Sachs, Wells Fargo, they all reported profits that were way better than anyone expected. This was a really good sign that, hey, despite all the scary headlines, the core of corporate America is actually doing pretty well.
But on the other side of the rope, you've got geopolitics, and it was pulling hard. China sanctioned parts of a South Korean company, a key U.S. ally, which was seen as a major shot across the bow. Then, late in the day, a threat of more trade actions just poured gasoline on the fire. And this stuff always hits the big tech stocks the hardest, since they're so tied to global trade.
And you know who's feeling this anxiety? The pros. In a brand new survey from Bank of America, they asked the big shot fund managers what they're most scared of. And while geopolitics was high on the list, look what took the top spot for the first time: a potential AI bubble. This just screams nervousness around how high and how fast some of these tech stocks have run.
Okay, that's the big picture. Now for the fun part. Let's look at how this all played out for individual companies. Who were the biggest winners? And who were the biggest losers in this mess?
The absolute standout winner of the day was the banking giant Wells Fargo. It just rocketed up over 7%. So why the huge jump? Well, it was a 1-2 punch. First, the bank raised its future profit targets, which is a huge sign of confidence. But second, and this is probably the bigger deal, they told everyone they have zero exposure to the risky subprime auto loan market. That's a huge area of worry right now, so hearing that was just a massive sigh of relief for investors. Now, on the other side of the coin, it was a really rough day for the darling of the AI world, NVIDIA, which fell pretty hard. I mean, you couldn't have written a worse script for NVIDIA today. It was a perfect storm. You had its rival, AMD, announcing a massive deal with Oracle. You had those U.S.-China trade fears hitting all the chip stocks. And then, to top it all off, news broke about an investigation into their chip imports, just a trifecta of negativity.
Now here's a surprising winner for you, the retail giant, Walmart. They had a fantastic day, up almost 5%.
So what was the story here? A really clever tech move. Walmart announced a partnership with OpenAI, you know, the ChatGPT folks. They're going to let people shop and pay for stuff right inside the chat.
And this is so smart, right? Investors didn't see this as a retail story, they saw it as an AI story, opening up a whole new way for Walmart to make money. And a couple other really interesting moves we've got to mention. First, a small mining company, Nova Minerals, literally doubled in price. Why? Because those US-China tensions made people worried about mineral supplies. And then, kind of ironically, JP Morgan actually fell almost 2%, even after their great earnings report, mostly because people were taking profits, and its CEO gave some cautious warnings about the economy.
Okay, so with this incredibly messy, complicated picture, what are you supposed to do? How should you even think about what comes next? Let's break it down into 3 possible scenarios.
Path number 1. The AI rally just keeps going. The logic here is that the Fed is going to provide the fuel, and the AI revolution is the real deal. In that world, you might want to buy the dip on tech stocks like AMD. Path 2. A defensive rotation. The idea here is the economy slows down, and investors run for safety in solid value stocks like Wells Fargo. And Path 3. The safe haven scramble. This is where geopolitical risks boil over, things get scary, and people might hedge with something like gold. 3 very, very different outcomes.
All right, let's bring it all home. What is the single most important thing you need to understand about where this market is right now at this crossroads?
And this quote from JP Morgan's CEO Jamie Dimon, this really gets to the heart of the anxiety in the market right now. He was talking specifically about car loan defaults, but his point was way bigger. When you see one problem, there are probably more hiding in the shadows. The market is fundamentally caught between the promise of easy money from the Fed and these growing cracks in the system.
So that leaves us with a really important question. In this kind of environment, what are the 2 absolute biggest risks that could derail everything?
Here they are. First, the risk that AI bubble we talked about finally pops. The fear is just that valuations have gotten too high, too fast, and a really sharp correction could be coming. And second is the ever-present risk that the US-China conflict stops simmering and actually boils over, which could trigger a massive, systemic shock to the market.
And ultimately, that's exactly where we are. The market is balanced on a knife's edge. On one side, you have the powerful tailwind of a supportive Federal Reserve pushing things up. On the other, you have the massive risk of a geopolitical shock that could pull everything down. And the question for every single investor right now is, which of these 2 powerful forces is going to win this tug of war?